Dan, so good to be with you today.
Thanks for having me.
Yeah, we got a lot to cover here, but for folks who might not know you, could you just give a quick 30-second intro to you and Pantera?
Sure, I'm originally a global macro investor. I was at Tiger Management before Pantera. Founded Pantera 22 years ago, and in 2013, we were the first investment firm to go into Bitcoin and blockchain.
Awesome. So I would love to start with this idea, actually, that we opened the conference with, which is this convergence that's happening in between equity markets and crypto. And I think maybe the two directions that we can go down here are DATs, which I think some folks in this audience have probably heard about yesterday. But then I also want to talk about IPOs and the IPO market opening up. So we want to start with DATs, and I would love to just get your high-level take. I know Pantera has been relatively involved.
Yeah, so I think DATs actually are a very important new access vehicle. And I will admit I was skeptical at first. When Michael Saylor started doing Bitcoin on his balance sheet, we don't really invest in public companies, so I was able to ignore it. And as it started growing and the snowball started getting bigger, I had to kind of think about it and address it. And I remember meeting a friend of mine, Mark Casey, who's a neighbor in California, and he owned 10% of MicroStrategy stock. And I was like, that seems kind of crazy, right? And his response 3-4 years ago really still resonates. He said he's a 40 Act investor, and he's very bullish on Bitcoin, and that's literally the only way he could get exposure to Bitcoin for his mutual fund investors. They invested a bit less than $1 billion and now have $6 billion of value. That is a great trade. He's added $5 billion of value for his mutual fund investors. So it really is all about access. Our funds are typically for, essentially very high ticket items. Our average investor is $2.5 million. We've launched the Solana company, a HSDT, a DAT. The average trade is $2,200, so it's 1,000 times more accessible. And I think the thing that people aren't yet, the skeptics, and there still are a lot of people skeptical, is they don't get that that DATs add a ton of value. Strategy is the biggest example in our space. They've added 76% more Bitcoins per share last year. So ETFs are inert. They don't do anything. They don't stake. They don't grow yield. They don't grow the number of Bitcoins per share. But Strategy's been able to grow at 76% last year, and I think about 30% this year. So DATs really do have the ability to provide access to people, provide yield, hopefully be able to grow the number of tokens per share.
So in your mind, Dan, do you think that DATs will permanently solve, because I think there's been a huge problem, right, over the course of the last, basically the entire time that crypto's been alive, with capital flowing into the space. And so it kind of flows in sometimes in these uneven ways. Maybe DATs are one conduit and vehicle for that. The other thing that DATs do, maybe less on the Bitcoin side of things, but some of the Solana DATs and Ethereum DATs are talking about more actively managing that capital, doing things like staking, deploying into DeFi. When you look at the premium, like the MNAV, which is what people like to talk about here, is the premium on DAT valuations. Do you see it more being generated because of this inability for capital to access crypto, or is it going to be generated more actively through these strategies?
Yeah, that's the beauty. It's all those things. It's providing access to a wider audience, which is very important because it's very hard to get access to some of these projects. It's taking a smart view on financial engineering, like Strategy's done a great job with preferred debt. They've increased the value of their NAV by adding more Bitcoins through financial engineering. They don't do staking, but Solana and Ethereum do staking, so you add 7% or so yield onto that. And so they have been able to grow the number of tokens per share. One of my partners says a funny line that the worst case for a DAT is it trades at par every day. And that's what an ETF does, right? So the way I think about it is DAT's really kind of the downside is it is just inert and trades like an ETF, but you do have the upside if you can increase the number of tokens per share. So there's been a flourish of them. I do think there's probably going to be one or two per currency. I don't think you need 20 Bitcoin DATs, but you do need one or two very well run ones in each currency.
Well, I know that Pantera has a Solana-focused DAT. I don't know if this is something you can speak about, but why Solana versus something like Bitcoin or Ethereum? Like, why that particular one?
Yeah, actually, two reasons. One is Michael Saylor is doing a great job on Bitcoin. They've been doing that for a long time, so we didn't really feel like we could add anything. We're one of the earliest, largest investors in Bitmine, and Tom Lee's doing a great job on Ethereum. So there again, we didn't feel like we could add much. There wasn't yet well, there are a few DATs in the Solana space, but we felt like we could add something. We've done a partnership with the Solana Foundation, and so we think we can become the preeminent Solana DAT. The other reason we're doing it is our largest position, right? So we really have the most conviction in Solana, and I know people get into religious wars about which token is the best, and we've had huge positions in Ethereum at times. We've had massive positions in Bitcoin. Right now, over the last, say, year, Solana's been our largest position. So it really aligns with our positioning to do that. And I actually think Solana is such an interesting story because obviously Bitcoin's been around for 17 years. It's awesome. Everybody knows the story. Ethereum's been around for 10, actually. So, you know, most people really know the story. There's still a lot of people that just don't know what Solana is and why it's important. It trades at only 5% of the market cap of Bitcoin. So as a trader, I kind of think it has, you know, more asymmetric upside, right? Like it really could catch up a bit to Bitcoin and Ethereum. So all those things came together, encourage us to do one.
I'd love to get your perspective on the IPO market for crypto. So, you know, a couple of years ago, all we had was Coinbase as a public company. Now there have been a number of relatively high-profile IPOs, Circle, Gemini, et cetera. I know Pantera's had a couple of IPOs from your portfolio. Do you think that window is now permanently open and we should expect a lot more IPOs? You know, talk to me about how you're viewing that particular part of the market.
Yeah, it's a really important theme for our industry. And the way I would characterize it is I think essentially the U.S. government, the U.S. SEC, essentially restrained our industry for a long time for reasons I frankly don't really understand. But I think that's permanently changed. Obviously, the party that controls the White House will change from time to time, but Congress really changed dramatically. There used to be a lot of very negative people in Congress. Our industry competed in 58 congressional elections last election. 54 anti-crypto people lost their jobs and were replaced by 54 pro-crypto people. So Congress is flipped to being actually very pro-crypto. If you think about it, there's a lot of really wild things going on in the world that Congress might devote time to, and they devoted it to stable coins.
Yeah.
And, you know, I'm in crypto, so I think that's great, but like, you know, frankly, it's kind of an esoteric issue for the United States Congress to address. They're working on market structure, which is super important. So all those have literally 180 changed the regulatory stance in the U.S. It used to be very scary for crypto, and now it's essentially open for business. That Circle could have or should have gone public years ago. It's a great company. There's no reason it shouldn't have been public. It's 30, 40 billion market cap, right? Like that should be a public company. It's not supposed to be private. And so the way I view it is it's kind of like it had been repressed for so long that it's kind of like an oil derrick. You know, when you stick a pipe into it, a geyser comes out. And that's what's happening. All these IPOs are just exploding out of the ground because there was so much pressure repressing it for a long time. There have been 9 IPOs this year in the crypto space, not counting all the DATs. Great companies like Circle, we've been investing in for 12 years. Figure Markets, another company we've been investing in for a long time. Amber, you know, all these portfolio companies are finally getting to go public. And the cool thing is you now have to have an opinion on crypto. If you're kind of a normal investor, you're typically benchmarked against the S&P 500, and the S&P 500 includes crypto companies, right? So you kind of can't ignore it anymore. And to my mind, that's so important because for a long time, a lot of skeptics, you know, really tried to keep crypto, you know, kind of off their balance sheet, didn't want to talk about it. And now with crypto and the S&P 500, you have to have an opinion.
What do you think the eventual liquidity event for companies is going to be moving forward? What I mean by that is historically, you're a private company, you work your way up, hopefully you can IPO, get acquired one day. But in crypto, we have this thing called tokens, which is we launch those and those are pretty liquid from even a very early stage, as early as you really want to be. Do you think that companies will choose one versus the other now that we have access to capital markets in the US? We do have there are some businesses that have both equity and tokens. I'm just curious how you think about that from with your investor hat on?
Yeah, so you're right. Back in the day, things used to either be a token, like Bitcoin, there was no company, or it used to be an equity, and there was never going to be a token. And now it is a bit confusing. There are a lot of projects that have both equity and a token. Thankfully, those projects typically sell both at the same time to the investor, so you get to buy both. Ultimately, some things just don't need a token, and a lot of protocols don't need equity, so those should stay relatively separate. Your point's very valid, though, is tokens go live so much quicker than equity, typically within a couple of years. And so one of the reasons investors really should focus on our space is the capital really recycles a lot faster than in the real world. But the funny thing is, even in venture equity, it happens much faster in blockchain. We've been doing venture funds for 13 years. All of our venture funds have repaid their capital to their investors within 4.5 years, which is super fast compared to the real world, where it normally takes 6, 8, 10 years to return capital. So I think that's one of the reasons why investors like our space. It just you kind of turn the capital, every 4 or 5 years rather than every 15 or 20.
Yeah, and do you think? I mean, I'm wondering what the implications of the IPO market being open are, and I think in crypto you have a lot of very early stage investors, maybe because you invest early, there's some sort of token and an early liquidity event, but it seems like there's less capital available later in kind of like the growth equity stage. Like, do you think that might change if there are successful IPOs and liquidity events for the equity investor side of things? Like, what are the changes that you see with the IPO market?
Yeah, I think it's a great point that when the pipe was stuck and blocked for 10 years, it's kind of hard to convince somebody to invest in a growth equity company if you can't see it ever going public. But now that companies are going public, I do think you're going to have normal investors want to come in and invest in pre-IPO companies. And we've seen that with our own portfolio. 4 companies went public this year. BitGo has filed an S1 to go public. So there's this very clear, it's like the flight path into an airport. You can see all these incoming IPOs. And so if you're a growth stage investor and you've seen 9 companies go public, you see a bunch more filing, you see other companies that are, there's companies, like Chainalysis, they've been around for 12 years. Like they could easily be public. So I do think you're going to see kind of normal growth stage investors come into our space. And we've seen that with our own kind of institutional investor base, where 6-8 months ago, we'd be telling them, hey, Circle's about ready to go public, or Figure's about ready to go public. And at the time, only a couple of our big investors really kind of took it seriously and did the work and invested. I would think going forward, now that all those have worked, and worked really well, if you put $1 in each of the 5 Pantera-oriented IPOs this year, you'd have $11, right? So, the returns are fantastic for investing in the space. That will bring more people in.
Yeah. I would love to maybe zoom out of kind of the market structure questions and just try to get your view of what's going on in this market, maybe more broadly, even outside of crypto. So, where I want to end this conversation on is this idea of the debasement trade that everyone is talking about. But I'm curious, do you think we're heading into a market that feels a little stagflationary and stalled, or we're also in the early innings of a rate cutting cycle? There are some very positive ways that you could look at this market too.
Yeah, so I have a very strong view on that. The macro world is pretty messed up. The Fed made a couple of huge policy errors in 2021 and 2022. And I would say we're in the beginning of a rate hike cycle. And I know this is super out of consensus, but it's crazy to be cutting rates when inflation's 50% higher than, quote, stable prices, which is only debasing your money 2% a year, which is 80% over your lifetime. Unfortunately, I think most countries have kind of let it go, right? The U.S. is cutting rates when it has a fiscal deficit larger than any time in history, with everything as good as possible. And so, I think it maybe was J.P. Morgan that called it the debasement trade. Goldman just sent a report on the debasement trade. It's at front page of the Wall Street Journal now. And one of our content guys who's been with Pantera for 10 years, like, we've been saying that for 10 years, right? So I do feel like it's cool that kind of mainstream, media and Wall Street are now branding it, the debasement trade and getting into it. But it is important, and we've been focused on it for a long time. But I think it is very important, and it's super relevant to the crypto industry. Is if the governments of the world are just going to keep printing pieces of paper money and just flooding the markets with paper money, the things that are of fixed quantity have to go up in price relative to paper money. And every day you read a headline that, Bitcoin hits an all-time high, gold hits an all-time high, housing hits an all-time high, all that stuff. It's actually paper money hitting an all-time low is really what's going on. Everything else is relatively the same, all those other fixed price assets. So I actually do think our industry is totally relevant right now because the governments of the world essentially have kind of let it drift and go. And they're going to always just try and keep debasing relative to each other. And I think even the Treasury Secretary of the U.S. said they want a weaker dollar, but we can't all have a weaker currency against each other, right? Like it just keeps going to zero. And so you kind of have to look at fixed quantity things, like Bitcoin and other cryptos.
Yeah, it is interesting that Wall Street has really, glommed onto this recently. And yeah, to your point, you've been talking about this for many years. And I noticed Mohammed Al-Arian the other day tweeted out a chart of the S&P denominated in gold and Bitcoin, which is, if you've been in this space on Twitter for a number of years, people have been tweeting that stuff out forever. But it's interesting to see it come from him. And I'm curious too, just to clarify your discussion on it being in a rate hike cycle versus a cut cycle. Do you think that's what we ought to do, or what is going to happen? Because if we're in the beginning of a rate hike cycle, I would imagine that markets have a little bit of room to fall from here.
Yeah, so this is out of consensus, but I'm happy to be out of consensus. In December 2021, the Fed funds rate was 0 and the 10-year note was 1.3. We put out our investor letter, which is available to anybody in the room if they want to sign up for it, saying that both of those would go to 5%. They did. I think they should stay, and I said they would stay there for a long time. Fed funds should be 5%. The 10-year should be 5%. I think it's a mistake to be cutting. Tricky, you're making me say whether they're going to admit they made a mistake and go the other way. 50-50, right? Like adults don't often admit they make a mistake and do the opposite, but they really should. And so that's why I'm bullish crypto, right? If they want to cut rates when inflation's 3%, massive housing inflation, massive inflation to everything else like gold and everything that's not directly in the CPI index, they probably should hike. But given that they won't, or it's 50-50 that they do a hike, you just got to be long fixed quantity things like crypto, because I don't see any other way out. The debt payments in the U.S. are now bigger than military and definitely way bigger than education and infrastructure and all the other things one might want to spend on.
So, I'm curious. I was watching a clip from Paul Tudor Jones the other day, who said that we might be everyone loves to say we're in this year or that year, and he was making this comparison to 1999, this kind of big blow off top, before an eventual crash. I'm curious, does that analog resonate with you? Does it not?
Yeah, so 99 was potentially a unique, weird phenomenon. I was at Tiger then, and all the tech stuff, .com stuff was going to crazy prices. I don't see that kind of craziness here in the equity market. I think equities are very overvalued relative to bonds, is what I would say. That if you look at the 50-year average of the equity risk premium, equities that have to fall 25% to be fairly valued versus the 50-year average. So I think equities are a bit expensive, or probably bonds are way too expensive. The Fed bought $9 trillion of bonds. They manipulated the bond market. So that is kind of the weird thing, is that the Federal Reserve's manipulating rates, and they still are. So I don't see a kind of .com explosion, kind of epic thing that's going to happen in the next 12 months. I just see this kind of slow decay of like paper currencies versus, hard money. So it's not going to be something you're going to read about in the newspaper tomorrow that, Paul Jones is a super smart guy, and maybe he's right, maybe everything will blow up tomorrow. I think it's more of kind of a slow decay, and it's kind of a boil the frog thing, right? Like you just don't feel it. In this country has the oldest currency on earth, right? It used to be backed by a pound of sterling silver, right? They've printed so many pieces of paper, pound sterling. It takes 340 pieces of the paper ones to buy a pound of sterling silver. You just don't notice the decay, but it's there.
Yeah. Well, Dan, we're about to be out of time here, but I know you're raising Fund 5 here, so if you could maybe close on just telling the audience a little bit about that.
Yeah, so I actually am as bullish on blockchain as ever. The change in the regulatory system in the U.S. really opens it up to allow companies to go public. We've had 25 companies become unicorns. I think the next decade is even better than that. And what we did in our last fund is put all 4 asset classes together. So venture equity, private tokens, special opportunities, and liquid tokens. And you can kind of move the capital from the expensive sector to the cheap sector, during that. In our current fund that we're almost done investing already has twice as many assets as the commitments that we got 4 years ago, and we haven't even fully called the capital. So I think, the blockchain space just has those kinds of opportunities that are, really hard to get in kind of the normal markets. And the returns from our space over all this, 12 years have just been, off the charts and very low correlation to the S&P 500. So any institutions out there, which the majority of which still have 0.0, that's so important. The majority of institutional investors have 0.0. You just got to get off 0.
All right, Dan, this was a lot of fun. Thank you so much for coming and doing this. Guys, give him a big round of applause.
Thank you.